Hey, I just wanted to make a quick video talking about uh, the difference between our actual risk versus actual potential reward. So, actual risk versus potential reward, and then what you end up with is actual reward. I'm not trying to show off this trade, that is not the point, but I am going to show the positions that I was just in so that I can show you um, what I'm talking about. And don't worry about this. This was just trying to squeeze a little bit more out of the market. So I had bought um, I bought down here initially, bought here, took two more here, got out of those positions here, held until here. Then I bought, and I thought I was going to have enough there, but it wasn't enough. So then I bought there, and then I bought there, and then I got stopped out there, and then I sold, and then it started going back up. I said, oh crap, this liquidity grab or something. So I bought, doubled down right here. I bought 8 right here, 0.25 lots, and then everything was 0.25 lots. It was 1, 2, 3, 4, 5, 6. Get out 2, close 4. What was it? It's not the point of this video. It's not to go over all this, but there's my trading history. 1, 2, 3. Okay, right. I was in 5 positions, and then I got a little bit more later, and then that was a small loss. See, which ones were the ones I got stopped out? No, this was the good trade here. That was that big trade. And then that's those 2 positions I got out of. Or no, maybe those is it. I don't know. But that's the stop out. I got stopped out there. Lost some more here. Doubled down there. And then just got just a little bit more here. Those videos are on my YouTube. I just uploaded them if you want to see those. That's not the point of the video. I do expect price to continue going up. So if you see it going up, that's what I expect. It looks like it may have swept this liquidity, but it may also, I was saying in the other video, it may go down either to here or, and that's pretty close. But if you look at the key levels, we won't hit it until down here, and then this won't hit until up here. See? So this is probably going for this key level here, and this is probably going for that one. And I don't know what this one might hit that one. So I don't know. It might go down first before it goes up, but that's not the point of this video. The point of this video is to say what was my risk and how did I figure it out. For these 3 positions I had here and these 2 positions that I held here, obviously I'm not counting these, and then what was my reward and how did I calculate that, and how I did it was this right here. This is a $5,000 account, but you're only allowed to lose $250 a day. So really it's a $250 account, but this was my take profit, and this is my stop loss. This was my actual risk, 2.17. This is just my initial entry. Obviously I did not calculate all of these because it was obviously moving fast and I was in and out real quick, and so that's a different story. Like, I'm talking about the main trade right here, which ideally you just close it out here, and you sort of you don't just take this many entries. Ideally, maybe you took one more here and then got out there, and let's call it a day, or took another entry here and got out there. It's got a little messy right here, I'm not gonna lie, but I wasn't actually necessarily trying to keep it clean. I was just trying to make a little bit more profit. But anyways, okay, so what was my ratio? Risk to reward, 4 over, it was 4 over basically 1/4, essentially 145 over 433. So 1 and 1. It was basically like 1.25 to 1, or 4.25 to 1 was my risk reward to risk ratio. And then that was my positions that I had on. And then for the first 3 positions, this is for the second 2 positions right here. And then this is the total risk that I had on. And then I just calculated, and you could do this too. And so the exact numbers are not important for me to read out, but you just say, well, what percent of 5,000, if that's your initial starting balance, what percent of 5,000 is whatever your calculated risk is, which was this, and then that gives you the percentage of this. And then I was talking about, I was showing this risk calculator that you can download from the marketplace. It's called Gadget PSC, and it's really nice. I don't want to go over it. I went over it in the other video. London Session Killer video. This video right here, London Session Killer 1.68.8. That video, I went over it. I'm not going to go over it again, but yeah, just want to go over this real quick. So potential reward is basically, I just calculated what my take profit was looking like at the time, which was actually slightly higher. I think I had my take profit. Actually, I could just copy paste to really put it on there. But what did I just do? Oh, sorry, my bad. I was trying to see what I had. That's what I was. I just uploaded that YouTube video. That's why. So, oh no, I got it on here, I think. Super laggy right now. Oh, I had it up there. Let's see. Initial take profit. Yeah, that was my initial take profit level right there. So as you can see, kind of turned around right there. That's where I took profit right there. My initial take profit was up here, so it was like right there somewhere. But the exact levels and everything's not important. But the thing is, I calculated what it was. You know, because when you place a position, it places the order line, the take profit line right here. Like for example, if I just place the order here and go in here and do take profit and put it up here. You know how it shows you the amount, right? So it shows you the amount, and so I just basically went and just added those together because I had 3 positions on at that level, and I had 2 positions on at this level. So I added that, and that's how I did my stop loss. That's how I got these numbers right here. And so then when I basically did the same thing, I said what percent of this number, because I added these together, I added all this potential reward together. I got this number. So I basically said what percent what percent risk is that, like that. Yeah, and what percent of 5,000 is this profit amount, and then it's 9.38. That was my potential. What ended up happening, my actual because I don't remember exactly. It's on the video, but I saw something on here that there goes up. I told you it just swept below that low, and then now it's gonna go probably make a new high now. But yeah, look at that level right there. Boom. It should react down off of that level there, so that's cool. If you need to know about quarters theory, I've got several videos on my channel. Just search quarters theory and you can watch. I think I've got like 7 videos on there or something now. They're all labeled quarters theory, but it's very, very useful. You should, I recommend to use. Always keep a monitor on, if you're trading USD pair, obviously keep a monitor on the dollar and see what it's doing. But anyways, back to what I was saying over here. So the actual reward was my profit. The first video I took this, and at the very end I started placing some more trades, which was a sell, and then it started going up, and then I bought, and then then after skirmish of trying to make a little bit more money, I got this, and so the 422 is actually, it's gonna be like that, so those go together, and but this was the new, right? The final for the day, and then. But when you consider that the 5% online funding, which is this company here, 5% online real demo account, 5% online LTD, that's this company right here. When you consider that the 5% daily loss is $250, then you can understand that basically, so during each day of trading, if you lose $250, they close your account forever, and you have to buy another account. You got to buy another challenge. So all you really have to trade with every single day is $250. So I basically turned $250 into $451. Yeah, and I only paid $39 for the challenge. So I'm not saying I'm gonna trade like this when I get my live account. I'm gonna be probably not risking quite as much. I'm gonna be playing more of a I guess conservative approach, or like a long game approach, where I was like, take the average of 10 trades versus like kind of going so heavy on the leverage. But we'll see what happens. But the goal is to keep the account, right, and to not have to go through the process of basically acquiring the funded account, right? Again, so you want to really manage your risk, and I'm going to do another video which I'm working on this trading plan. But basically, it's a trading plan that helps you manage your risk and stuff like that. So you have max weekly losses, max daily losses, and stuff like that. So that's going to be another video. But this video is just to show you real quick how I calculated my actual risk versus potential reward, and then my actual reward, and then yeah, and then what the percentage was So that's a pretty good percentage, right? Anybody, if you ask any trader that knows anything about risk management and knows anything about it's actually making money trading, they'll say 9% is really good. The fact is, you only have $250 to trade with on this account. Now you have the leverage and everything like that, but really you're trading with essentially $250. So if you consider that, what I ended up with after the second video is in this one, if you watch this one, London Session Killer, 180%, you'll see that you'll see that that's the last little bit that I added right here to get this percent here. So that's what that is. So but yeah, so 180% was what I did, but that's not the point of this video. The point of this video is to say this is how you could do it, and it's important not that you have to do this every single time, but it's important that we understand and respect the risk that we're putting on, and truly, if you're watching my videos and you're listening to me say this, you're like, dude, you had 2 lots on the last video hanging in the middle of the midair, and it was like you did the other day. I have a video up where I show myself doing this one where it says I'm still crazy, using insane leverage to get my 25%. That's another account that I have with the 5%ers, where I used essentially 2 lots or 8.25 lots to just get $25. So yeah, I'm behaving that way now for but that's not the way that really we should conduct ourselves as traders. Really, we should be following a trading plan. I created this trading plan after a day where it was just a bad day. I think I blew 2 or 3 accounts in one day, maybe at least 2 accounts, if not 3 accounts in one day that I had paid for. So it was like $39 accounts, just like I'm trading right now, exactly the same. And I think I blew like 2 or 3 that day, and I'm like, dude, I need a trading plan. And then I found this YouTube channel called Not Just a Trade, and actually it was like somebody flipped a switch in my brain, like God flipped a switch in my brain that allowed me to see the market totally differently. Like used to, I've been selling the crap out of this, I would have sold like this or this. I would have sold this and got wiped out, and then I would be like selling this, and you say, well, it looks good now, yeah, but I'm telling you, watch and wait and see what happens. And like for example, most people don't follow these key levels. Like most people, I haven't seen that many people having like quarters theory levels on their charts. Like I know Michael Joe Huddleston, ICT, Inner Circle Trader, he talks about 80 levels and 20 levels and whatever, whole levels and all that stuff, but that's not quarters theory. Quarters theory is quarters. Like you take $1 and it's divided into 50 cents, and then it's divided into quarters, right? That's quarters theory. That's not what Michael Joe Huddleston, ICT, Inner Circle Trader teaches. Okay, it's totally different. This is quarters theory, and what I'm looking at, that my expectation is a strong reaction off this level. And I only say that because of this quarters theory level, because the way that I mark them, this is a significant, because see how it's dotted? It's dotted because I believe it's a 10,000 level. I believe if I was to open this up and we were to go to higher time frame, it should, if I have it dialed in, I may not have this one completely perfect yet. I need to work on it. Yeah, like right here, this is even higher level than these dots, right? This dash level is higher than the dots, but the dots are higher than the lines. You see what I'm saying? So it's about strength. You're labeling based on color strength, and you're labeling based on the line style and thickness also. And I've got videos on that, so watch the videos. But that is exactly why, and also too, just because this range, right? There's a range, and we can expect a reaction off that range, right? And some people call that an order block. You can call it whatever you want. Doesn't matter to me. There's confluence here with an order block and that key level. So just purely based on that, I would expect to go down. But there's also a big, huge pool of liquidity up here, which could be targeted, especially during like CPI. So you just have to do your own analysis, because this is not financial advice in any way, shape, or form. And I'm not your financial advisor. I'm not even a real financial advisor. I don't even pretend to be, because I don't even ever. Obviously, I'm just kidding, because I'm not anywhere close to a financial advisor. I've never even studied that stuff. So, yeah. So say it's going up. Like I said, my old idea would always be to sell this. Sell everything. Sell. It's too high. But remember, this is not. Don't get looking at that, because that's not a real level. That's just my old take profit. But yeah, so that's what I expect. But anyway, this is not the video. Is not about that. But look at it go. Normally, I would have sold the hell out of this, and you're supposed to take partials. So if you did that, you're probably okay if you took partials, or you just close the whole trade. You take a little small 1 minute. You just go ham, boom, take that, and that's fine. But watch it; it'll break that high, and then it'll break this high, and it'll keep going. Anyway, because remember, ICT Michael Joel Huddleston, Inner Circle Trader, teaches Power 3 that when it goes, a lot of times when it goes down after midnight, it'll go up for the rest of the day. And I would not have been surprised if it did like retrace a little bit further, like down to this level right here. But actually, look at that. Actually, it did, didn't it? Look at that. That's perfect. Look at that. It hit it right on the nail on the head. Boom, right there. Yeah, so it's definitely going up. Oh, it's going up for real. This is not financial advice, but it's going up. Yeah. For real. This is not the purpose of this video. The video was just to show you about that, what I showed you already. But my expectation is for a price to go. See, because this is the average, true daily range right here. 900. It was about 930, but I always round down. So it's got 900, but it usually retraces around halfway point. But my expectation is for New York session to carry it up to here, consolidate until tomorrow CPI, take out this liquidity, and then maybe probably go down and take out some sell side liquidity, which would be like this stuff here. And whatever it wants to do. Yeah, but I'm definitely not surprised that it's going back up now. Used to, I would have never occurred to me, I would have thought it was going down to hell, for real, after going up this high. But my whole attitude and outlook on trading has changed as a result of watching not just a trader on YouTube. So I'm gonna go get something to eat. Thanks for watching, and I don't want this video to get too long either, so hopefully it wasn't too long, hopefully it was helpful, and yeah, appreciate you watching, and thanks so much, And until next time, ciao.